Hello and welcome everybody to today's live commodity market analysis for the 25th of May 2017, presented by the Gold and Silver Club. During today's session, we will of course be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we expect gold, silver and also oil to be heading next, answering questions and of course providing live support as well. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Of course, it is, excuse me, it is a pleasure to be here today on FX Street as well. For further information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldandsilverclub.com. Okay, so we've got a lot to cover during today's session. For those of you who don't know, I'm sure a lot of you are aware of this by now, but OPEC has agreed to extend oil production cuts by an additional 9 months. And with that, we've certainly seen some volatility today on oil, which I want to explore further with you on both US oil, UK oil, the correlations to that, which we can have a look at. Most notably the inverse correlation with US dollar, Canadian dollar as well. We'll have a look at all of the markets which are providing good trading opportunities right now. So before we do so, I'll go over portfolio performance, our trading performance update using our exclusive research-driven strategies. One of our top trades over the course of this week has been taking advantage of the breakdown in US dollar, Canadian dollar, which essentially moves in the opposite direction to US oil. You've got an inverse correlation, very strong inverse correlation between the two, and we've capitalized on 175 pip breakdown on USD Canadian dollar over the last week. So we've essentially seen oil continue to rally on expectation and anticipation. Excuse the background noise. Oil, we've seen continue to rally on the anticipation of the OPEC agreement to extend oil production by 9 months. And with that, over the last week, we've seen a lot of that get priced into the market. And there's been a great trading opportunity, not only on oil for the long side, but also on US dollar, Canadian dollar for the sell short side. So let me bring you over to the charts. We'll go into this in further detail. I'll go over to my charts. We'll have a look at the technicals now. So first of all, we'll have a look at US oil. So US oil has been quite choppy over the course, certainly this morning when this breaking news came out approximately just around 11 a.m., just after 11 a.m. London time today. So what is the big news here? The big news, of course, is that OPEC has agreed to extend oil production cuts by 9 months. What we have seen over the last couple of weeks is a lot of this has already been baked into the price. So what does that mean? It means we've already seen a rally on anticipation for this news to come out. So whether we can actually go much higher from here is the question, because at the moment oil has been quite choppy today. Initially we certainly saw a case of buy the rumor and then sell the news. So certainly we've seen a sell-off earlier on during the London session, and we've got a bit of a retracement at the moment. We're about halfway in terms of the price structure from the daily high to the daily low, and we're really ricocheting right in the middle of that range right now. So traders are trying to make up their mind whether this is bullish news or whether it's already been priced in, and whether we're going to see oil start to roll over and break down. Now, I would suggest oil short term is overbought. That we've had a very strong rally over the last couple of weeks on the anticipation that OPEC would be increasing their agreement to extend oil production cuts by 9 months. We've already seen a lot of that get priced in. Had they have come out with something a little bit more special, such as an OPEC agreement to extend oil production by, let's say, 12 months, which would have been a real wild card, not anticipated, that probably would have really given ammunition here for oil to go significantly higher today. If you traded OPEC meetings before, when it's bullish, you see the price surge very quickly. So previously, if you go back to the price, this was the OPEC meeting, okay, going back to November, where it was confirmed, it was made, they would go ahead and agree to an output an oil production cut. This is where we saw within one day a 10% move, and within the following week a 15% move. But a lot of that happened very quickly off the back of the statement, the official statement. And we haven't seen that this time round. Oil has been hovering around 51 US dollars per barrel, and it's not really had the sort of follow through that you would normally anticipate if the bulls were going to be in control here, if we were to see further upside on this market. I suspect today we're going to consolidate. We could still just stay relatively range bound, but we are at an area within the range where we could start to see a bit of a pullback. A V-shaped reversal pattern, I would suggest, is on the cards here, potentially seeing oil roll over and start to pull back. What I'm quite interested in at the moment is also the correlation, the inverse correlation that we've got with US dollar Canadian dollar, which is right at the lower end of its range as well. So I'll take you over to a raw chart here. This is US dollar Canadian dollar, which the breakdown in price here has matched the breakout to the upside for oil. So where we've seen US oil and UK oil break out significantly over the last couple of weeks, we've seen US dollar Canadian dollar break down with the inverse relationship. We've come into a major underlying area of support for US dollar Canadian dollar. Even on a raw chart, you can see that very clearly, where we're finding support at the lower end of this channel right now. Not bad from a risk reward point of view as well. It's in an oversold condition, so it's the opposite to oil at the moment. US dollar Canadian dollar is oversold, whereas oil at the moment is short-term overbought. We're getting a bounce where you would expect it to get bid back up from if oil was going to pause or potentially start to roll over and break back down again. So I would keep an eye out for this, the potential for the US dollar Canadian dollar here to get a bid at the lower end of this support zone. Short term, it is oversold. We could see, if there's nothing additional to come out of OPEC today, if we're not going to see anything else, a lot of the move has already been priced into the market, and we could start to see oil slowly but surely roll over and break down or pause. But I would be looking at the potential for more follow through with US dollar Canadian dollar, but only if it holds underlying support. If it breaks below this, let's say by the end of today, if we were to see a break and a close below this level and we close near the daily lows, then yes, we're probably going to see further downside for US dollar Canadian dollar, more upside for both Brent crude oil and also for US oil as well, WTI crude oil. We'll move over to Brent crude oil as well. So Brent, similar situation, quite a lot of chop today. Where we're sat right now, in fact, for Brent crude oil, which is around $53.80 per barrel, sellers looking to get a good price or hedge at the moment from the recent bounce. We've had a very significant rally since we came all the way back into a major oversold condition where Brent crude oil broke down to 47 US dollars per barrel. It's had over an 800-point rally. We're ricocheting between support and resistance at the moment. So it's within the zone. I'm looking at higher time frame. So if I draw your attention to the weekly time frame, I do note that we have, and this is the case also for both UK oil and US oil as well, I would note that both of these markets have come into overhead resistance here. So you can see here where we're back at the upper end of this weekly trend channel, we've popped up to the upper end of that range and short-term overbought. So it's retested the upper end of this overhead resistance, and we might see the potential for oil to roll over and break back down. Or if oil can build up momentum, close near its daily highs today, then that would potentially lead to a move higher, break above the trend channel, and you would see additional follow through. And that's what I would be looking out for very closely today. We've got a rejection candle on the daily chart at the moment, but we're right into a lot of overhead resistance too. So we could remain range bound here on oil. Oil might just move sideways, but I would suggest short term at the moment, momentum is in favor of the bears. The path of least resistance, in my opinion, would be down short term at the moment for oil, because a lot of the move has already been priced in. But we're only getting started into the US session at the moment, so we'll continue to monitor how oil develops its price structure. What I'm most interested in is how oil does close by the end of today as well. Now, again, other markets that we need to pay attention to today too will be the US dollar index. Now, the US dollar index is actually currently finding support at a very key level here at the moment, which is just below the 97 zone, so above 96.70. We've seen the US dollar index hold support at that zone 4 days in a row now. The US dollar index is quite significantly oversold short term at the moment as well. And we're watching out to see whether we will get a bounce above this level. There is actually a very critical level here, because if the 96.50 zone was to get breached and a close below that, that would provide further technical damage to the US dollar, and we would likely then start to see a number of commodities rally significantly against that, which of course would include gold and also silver as well, priced in US dollars. At the moment, it has been holding up. We've seen support at major levels here, so around the 96.70 zone. We are oversold as well, and I'm also watching out for some of the inverse correlations on this too. So not only with gold and silver, although we'll go over to gold and silver now. So gold at the moment is being held down right now by a major overhead level of resistance here as well. We're continuing to go up against about 1,260 to 1,265 US dollars per ounce. I've had a lot of questions on gold this week because of where we're sat just within the range right now. I would suggest right now gold is range bound. It needs to make a decision. If gold was to break above 1,265 US dollars per ounce, it does open up the door for a move back towards the April highs here, which will be sitting between 1290 up to 1300s. It would need to break above 1265 to confirm that, though, to really get a move on, break above all of this resistance, and then we could really start to see gold move significantly higher. However, if it continues to hold below 1265 to 1260, it is vulnerable. It's also vulnerable to US dollar strength at the moment as well. And we'll continue to watch out for that. And I see the potential for a rollover lower here as well today, for a move back towards 1,250 US dollar, because of also where the S&P 500 and equities are at right now. The S&P 500 is currently breaking out to all-time highs. It's currently trading at 2,400. And when you see this move, there's a very clear correlation between the S&P 500 going up and gold and silver selling off. So I suspect gold and silver's move higher will be muted today by the fact that the S&P 500 has now broken out to all-time highs. It's actually just clearing above some key resistance levels here, including the monthly pivot. It's taking out all of these highs here, which were produced after the second round of the French election, and it had the highest close all year as well, all-time highs actually into the close yesterday and today. 2,414. S&P 500 is up and running here as well. So how can you take advantage of this at the moment? The momentum, of course, you can, if you're already in trades on the S&P or equities, you could look at the follow through. You've got similar situation with the Dow Jones is also breaking out, the Nasdaq too. We're seeing this across the board. And note also how quickly we've seen this snapback in price. Going back to just a week ago, we saw the biggest one-day move lower for the S&P, for the Dow Jones, all the way back to September of 2016. The biggest one-day sell-off. Note how quickly, again, we've seen that snapback in price. Support again here. Overall, the main play has been to buy into the pullback, not to get too concerned that the stock markets are about to crash or significantly break down. It's been very temporary, and we've seen, again, another snapback in price and breakout to all-time highs. So of course you want to be positioned on the right side, not on the wrong side of that, not panicking if you had been long, and also not trying to be a hero and try and look for a market, a much more significant market correction, when it's very clearly oversold on the daily chart last week on Wednesday. That big one-day move already positioned very quickly. Equities, the S&P, the Dow Jones, and Nasdaq already into a very key oversold level within 1 day, because it was such a big move. So you didn't want to get caught out on the wrong side of that, and I hope none of you did get caught out on the wrong side of that move. Now, other positions I would keep an eye out for at the moment, particularly if we see weakness in gold and silver, I would look towards the correlation with Australian dollar, US dollar as well. So Australian US dollar, I'll bring out a raw chart on this. Let's see. Yeah, we are seeing some weakness. We've got overhead resistance here. It did get bid today. Australian dollar, US dollar has quite a strong correlation with both iron ore and also gold as well, which are main exports from Australia. And with that, we've seen weakness over this week in iron ore. It's come back up, very similar price structure to the upper end of a trend channel here. It's come into an overbought condition short term. We're looking to see whether we'll roll over and break down. yesterday, Australian US dollar, it broke all the way back up towards resistance, closed at the daily highs, no follow through overnight. It's already pulled back here, back towards the weekly lows here as well. We're not too far off the weekly lows, and it looks weak at the moment. I would suggest if the US dollar builds up support today, it's a key support, and if gold and silver continue to start to roll over and sell off, if the S&P 500 and equities rally, we're going to see more downside momentum here on Australian US dollar. I would certainly look out for a trade opportunity here. We discussed this, I think, last week as well, the sell zone around this level that we were looking at. So I'd look for a potentially more momentum to the downside. There might well be trading opportunities for a sell short in gold or silver, although I would await a little bit more confirmation. From a risk to reward basis, getting into gold at the moment, sure, a lot of you are aware it can get very quickly bid back up on geopolitical tension and politics at the moment. We've seen that a lot in the last week with Donald Trump, of course, which we discussed on last week's session as well. The firing of James Comey, of course, the director of the FBI, and last week, especially on Wednesday, the main headlines were the fact that Donald Trump had given classified information to the Russians, and that was all causing a lot of nervousness. The VIX jumped up significantly, over a 20% move to the upside on the VIX. But note this: the volatility index, which broke out 20% last week, has given back all of those gains already. So the volatility, the fear in the market, which led to one of gold's biggest one-day moves since November 2016, it led to also the biggest stock market sell-off since September of 2016. It only lasted 2 days. Within 2 days, the markets have resumed again. The VIX is back to low volatility. And of course, we've seen a resumption of equities rallying, S&P 500 most notably, and the Dow Jones breaking out to all-time highs. And now I would suggest potentially there's some weakness in gold and silver. I am looking for a good, solid buying opportunity on gold and silver into June and July, particularly after the FOMC statement, or around the FOMC statement, which is not far away now. It's approximately 3 weeks away. Now, for the minutes of the FOMC yesterday, overall, the market seemed to take that as certainly the US dollar weakened initially. Off the back of that, we also saw some strength into the close on gold and silver, but a lot of that has been faded. We've seen those rallies get sold into. The rally on gold and silver hasn't really managed to continue to the upside. The US dollar index stopped selling off this morning and started to retrace and go higher again. The overall consensus is that the Fed will hike at the June meeting. That's the overall consensus. There is a bit of skepticism because of both the weaker economic data and still low inflation, but overall, the overall consensus is that they will go ahead and hike at the FOMC statement on the 14th of June. Now, you have to remember, I'm sure a lot of you are aware of this anyway, but there are 8 FOMC statements a year. 4 of those are really big, high impact, because we, of course, have Janet Yellen delivering a press conference afterwards, which could cause more volatility. And the one coming up in June, on the 14th of June, is one of those big statements. So it only happens once per quarter, that it gives a really big trading opportunity off the back of that announcement. So that is not too far away, about 2.5 to 3 weeks away. But overall, gold currently is running out of steam. I'm looking to see whether we will start to break down low. You could argue here that technically we have the potential for a bear flag if we were to break below yesterday's low here and then roll over and move back towards the lower end of this channel. Gold and silver short-term overbought as well, although they've got quite a lot of underlying support. So I suspect they will either potentially retrace and go lower here, or they'll just consolidate and won't really do too much today. We might just see it stay within this range. Now, if we do, the confirmation for a buy would be, in my point of view here, would be a break above the 1260 to 1265 zone. We get that, we break out to the upside, and then I would be looking for some solid follow through. But right now, I don't have a reason to suspect that we are going to break out to the upside. In fact, the bear camp right now has the edge with gold and silver because of the failed breakout that we got yesterday. Even with a breakout to the daily highs and closing near the daily highs, we're still getting lower highs here over the week and lower lows. So overall, gold is in a short-term downward trend. You can see very clearly that on my chart here as well. So I would be aware of that too. Moving over to silver. Now, we discussed a really nice and solid trading opportunity on silver going back a couple of weeks ago. Very oversold condition, came all the way back down to major Fibonacci retracement level, the 76.4 level, which is where silver needed to hold. It's done exactly what we thought it would do. We've had a retracement and a rally back up towards the 17 zone. It's managed to get as high as about 17.20 to 25 within the last couple of days here. We've got now a pennant formation, consolidation developing on silver. If you look at the gold to silver ratio, that is favoring silver over gold at the moment. So essentially, if you're looking to sell into gold or silver, gold is likely to go down further than silver at the moment. And if you were looking to buy gold or silver, silver would be the better buy short term as well. Although silver is encountering a lot of resistance, it might either pause here or start to roll over. But again, US dollar strength could be the main driver here as to whether we can actually get any additional momentum to the upside with gold and silver, or whether they roll over. The price action is not really too encouraging today. Not really too much going on actually at the moment with gold and silver. The main focus is on equities today, and also on oil, of course, as well, off the back of the OPEC meeting. So oil at the moment, I suspect later on in the session we'll have a much better idea, and also into the closes as well today. Oil is one of the most heavily traded, well, it is the most heavily traded commodity in the world. It's getting a lot of bids today. We could see that this choppy price action. Overall, I would suggest that I wouldn't be surprised today to see oil close nearer towards the lower end of this range, around the monthly pivot, around $50 per barrel. So a little bit more of a further retracement here. If it was to close near the daily lows, that would be a very large rejection candle, which would develop on the daily chart, and that would be looking quite bearish on a closing basis. So if we were to just hold around 51.12 and on this retracement and then start to pull back lower, that's what we would look at. On the bullish side, so if we were to see oil get bid back up, let's say over the course of the US session, and close the day at the daily highs here, then yes, that would suggest that momentum is in favor of the bulls here, and we might get some further follow through tomorrow and actually revisit all the way back towards the upper end of the trend channel, which from where the price is right now would be approximately a $2 move higher here. But I think we're likely to remain range bound, and I would still suggest that we're short term overbought, and right now overall the price structure is in favor of the bears currently with oil. So I would look at the potential to sell into a rally currently, but we'll see really how this develops later on. It's a case of scaling into a position at the moment, but I do see the path of least resistance has been down as a case of buy the rumor and then sell the news. But we'll continue to monitor this. We're watching it on lower time frames. I also quite like the US dollar CAD correlation here as well. So the price structure of oil there for a sell is a little bit choppy, but if we go over to the US dollar Canadian dollar, it's got quite a tight risk to reward if it holds support the lower end of this major supportive channel. So if oil sells off, USD CAD would get bid up with the inverse correlation. It's not a perfect like for like correlation. Not every single tick will be like for like, but overall there's strong correlation between if oil goes up, US dollar Canadian dollar generally goes down, and vice versa. So if oil continues to sell off today, we would likely see US dollar Canadian dollar get bid back up again as well. So I hope that helps. I hope that gives you a little bit of insight into what we're looking at today, where the price action is at the moment. I would also keep an eye on Australian US dollar for the potential for a breakdown within this overall resistance zone, which is coming to overbought as well short term. If we get US dollar strength, we can see that play out. Also worth of note, if you do tend to track gold quite a lot, you trade it a lot, gold versus the euro is looking quite weak, and gold versus the euro can be quite a strong leading indicator for gold versus the US dollar. So this is gold priced in euros. Gold priced in euros has been very weak throughout most of the week. It hasn't really had this big breakout to the upside like we saw last week on gold versus the US dollar. It's still hovering very near to the January swing lows. If we break down below support this week, or as we go into next week on gold euro, it is relatively high probability that gold US dollar would not be able to go much higher as well, that it will probably stall and roll over. Of course, on the flip side of that, if gold euro can hold support, break out and start to build a bit of a base here, that would also, you probably see the correlation with gold US dollar. But I would just look out for this. At the moment, gold euro is looking a little bit weak, and also so is Australian US dollar as well. So I hope that helps give a little bit of insight, guys. If you did enjoy today's analysis and you want to know the exact trades that we're taking at the Gold and Silver Club, we've got into several positions today as well. If you want to know the exact entry, exit, take profit, full trade management of every single trade that we are taking at the Gold and Silver Club, and you'd like access to become a private member of the Gold and Silver Club, have access to our live trading rooms during the week and all of the other resources that we provide at the Gold and Silver Club, which include access to our private members academy, all all of our trading strategies, training, all of our online resources, training videos. I'll talk you through that in more detail shortly. But if you would like to get access to that, all you need to do is go to www.jointhegoldandsilverclub.com, make an application, and we'll of course get in touch with you ASAP. So as a member, you get access to our live trading rooms during the week. So essentially you get access to our expert traders analyzing the markets right in front of you, going through trade setup, sharing our exact entry, exit, profit and stop loss targets, and also trade management of every single position. You get real-time notifications via email and SMS alerting you to every single trade that we are taking, so you don't miss out on any trading opportunities. You get our commodity research, so exclusive access to our proprietary trading research and market insights to help boost your win rate and ensure you're getting on the right side of trade. So again, you get exclusive weekly live trading room webinars, live trade setups ready to implement, real-time notifications, get those via email and SMS so you're not missing out on profitable trades, details of where we are entering, exiting, placing our stop losses on trades, and trade management. You get to know every single trade that we are taking is telegraphed to you. You get the week ahead trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and also institutional level trading research and commodity insights to give you an edge in the markets as well. So again, if you'd like to get access to the Gold and Silver Club, you might make an application to become a member of the Gold and Silver Club. All you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, good trading. Good luck out there today. And with that, I very much look forward to working with those of you who'll be joining us at the Gold and Silver Club. And I wish you all the best. And of course, have a great day. Okay. Thanks, everybody. Thanks to FX Street for hosting today's session. And we'll speak to you real soon. Thanks, everyone. All the best. Bye-bye.